So traders, we are back again on Wikicat Coin, and if you missed our previous analysis, make sure to check the link in the description because today's breakdown builds directly on everything we discussed earlier. This continuation will help you understand not just what the market is doing, but why it's doing it, and that is where true trading confidence comes from. In our last analysis, I pointed out a very important structure, a resistance level that flipped into a support level. This type of level is called a key reaction zone, and in smart money concepts, it often becomes an area where institutional traders make big decisions. I mentioned that if price returned to this newly formed support, we would wait for price to respect the level and then look for a buy setup. On the other hand, if price broke below the support, we wouldn't panic or force trades. We would wait for the retest and then look for a sell continuation. Now, when we observe the market today, one thing is very clear. Price has not yet shown strong enough momentum to return to that key support zone. And this alone teaches one of the most important lessons in trading. Right now, that support zone is still valid, still respected, and still the main level we are watching for our next move. There are no new entries on the chart yet, and I'm not entering any trade until price gives us a clean reaction. So here is exactly what we are waiting for. Scenario ke kan. If the market pulls back into the support zone around 0.87 and forms a clean, strong bullish candlestick, such as a rejection wick, pin bar, or engulfing candle, that becomes our confirmation to enter a buy. This setup aligns perfectly with SMC principles: support zone, price mitigation, bullish reaction, momentum continuation. It's clean, high probability, and disciplined. Scenario 2. But if price fails to respect the support and instead breaks below it, that signals something very important. Sellers are taking control of the market. We do not chase the breakout. We do not FOMO into the move. Instead, we patiently wait for price to pull back and retest the broken support, which now becomes resistance. If we see a bearish candlestick at the retest, that becomes a clear continuation setup to the downside. Break, retest, confirm, sell, FOD. Key point to remember. Whether the market goes up or down doesn't matter. What matters is that our support zone remains the central decision-making point. If price respects it, we buy. If price breaks it, we wait for the retest and sell. Either way, the chart will tell us what to do. All we need is patience and discipline. Summary. Support zone is still valid. Buy if price returns to 0.87 and shows bullish confirmation. Sell only if price breaks and retests the level. Patience remains our biggest trading edge. No emotional trading, only structured reactions. So traders, I want to hear from you. Do you think buyers will defend the 0.87 support zone again? Or will sellers finally break through it and shift momentum? Drop your predictions in the comments and let's discuss. All right, traders, that is all on Wikicat Coin. Until then, trade safe, stay disciplined, and I will see you in the next video.